What is a jumbo loan? What's going on, everybody? It's Jeff Trevarthen. Jeff the Mortgage Pro is what I go by here on YouTube. Thanks so much for watching my channel. I love it when you guys like my videos. So if you like this video in particular, please make sure you hit that like button down below. And if you want to know when these videos come out, there's a little bell button next to the subscribe button. Go ahead and click on that. That way you'll get alerted whenever I put my videos out. I usually try to put them out every Tuesday and Thursday. And if you guys have any questions at all about that, please make sure you reach out to me. I love chatting with people that are watching my channel. It really means a lot to me that you're doing that. So thanks so much for being a subscriber and being a watcher of my videos. Thanks so much. All right, today we're looking at jumbo loans. So I consider myself an expert in jumbo loans because I live and work in Silicon Valley of California. This is a market where high prices are the norm around here, and jumbo loans are the norm for people who are trying to get a mortgage. So what's a jumbo loan? It is a type of financing that exists and it exceeds the limits set by the FHFA, the Federal Housing Finance Agency. So every year for the last, several years that I can think of, we've watched the conforming limits go up. I can remember it when it was somewhere in the 300,000s range, and now it's clear up to 1,089,000, I believe is what it is this year, for a high balance loan. So you have conforming loans and then you have high balance loans in certain high cost areas, but anything above that conforming loan limit is also considered a jumbo loan. Okay, if it's above the high balance loan limit, then it's definitely a jumbo loan going forward. So these are the norm in many metropolitan areas across the United States. Even first-time home buyers have to get jumbo loans in certain areas, which is crazy. But at the same time, you have to get this just because the prices of homes are so high. So jumbo loans, anything that exceeds those loan limits that are set forth every year by the FHFA, okay? So these loans are not able to be purchased by Fannie Mae or Freddie Mac, so that's why they're a little bit more stringent in how we look at them. So here's some typical qualifications for a jumbo loan, okay? These can be for primary residences, they can be for second home or vacation homes, and they can also be for investment properties as well. So they have a little bit more stringent underwriting than what you would see with conventional loans and government loans. And the reason being is because they are not usually sold on a secondary market and then sold again. They're usually going to one specific investor, or in like a bank's instance, they may keep that as a portfolio product and keep it in their portfolio of loans that they hold. Same thing with like a credit union. They're going to hold those loans. They're not going to sell them to anybody else. If you're working with somebody like me as a mortgage banker, we're going to sell them directly to an investor. And it's not going to be Fannie Mae or Freddie Mac. It's going to be whatever bank or hedge fund or insurance company is the one that's investing in that particular loan and that particular product with that particular amount of guidelines. Okay. So credit scores are usually going to need to be a little bit better. We're going to have at least a 700 credit score, and we can go down to about 660 usually on jumbo loans, but the terms start to get really, really bad. So we're not going to, we want people that are going to borrow this much money to have higher credit scores. So if you're anywhere above 700 credit score, you can traditionally get a jumbo loan. If you can go down to 660, yes, but at the same time, it's not going to be very favorable for you to borrow, especially if you don't have any other compensating factors. Debt to income ratios, again, are a little bit more stringent with jumbo loans. We want to see 43% or below on the debt to income ratio. Now, again, there's alternative products that can go as high as 50%. I've seen them up to 55% in some instances, but for the most part, 43% debt to income ratio is the guideline that we're looking for to keep our income under, okay? Down payments are usually going to be 20% or more on jumbo loans. As credit has tightened over the last year or so, most investors are actually looking for 25% or more. So if you can get to that amount of down payment, that's awesome. But if you can't, 20% or more is still pretty good. And then again, there's still alternatives out there to be able to get to as little as 10% down. And in years past, I've actually seen as little as 5% down on jumbo loans, like up to $2 million, which blows my mind. And I don't see that credit as loose as it was a couple of years ago, but there The market goes in cycles, and so those things will eventually come back someday, I believe, for jumbo loans to have like 5% down, as little as 5% down on their particular loans. Okay. So usually when we're doing conforming loans, we don't need any what's called reserves. So a reserve, 1 month of reserves is your principal, interest, taxes, and insurance payment. That's 1 month of reserves. And for jumbo loans, usually anything under $1 million, we're going to need at least 6 months of reserves left over. And then usually anything over $1 million, we're going to need at least 12 months, sometimes more like 18 or 24 months worth of reserves. And that's money that's left over in the bank. It's not something that you're going to use as part of the transaction. It's used as a risk calculation for lenders. They want to make sure that we can make the monthly payment should, we lose a job or, whatever the circumstances might be. But they want to, again, it's just a risk calculation for a bank. And what I think is crazy about reserves is that I'm starting to see more and more banks want more and more reserves right now, especially as credit is tightened. So just make sure that you have that left over. It doesn't have to be just cash in your savings and checking account. We can use things like 401ks, IRAs, stocks, bonds, and it's going to be a percentage of most of that stuff other than checking and savings accounts, which is probably just going to be 100%. We're going to be able to use all of that because it's just pure liquid cash. But any type of retirement accounts or stocks or bonds, things that would need to be moved around, and there would be fees if you move that stuff around, we're going to take a percentage of those to use as reserves. So 6 months reserves minimum, but up to 12, 24 months, 36 months if we're getting up to bigger jumbo loan amounts. Okay. And then we're going to usually need a little bit more tax returns with jumbo loans because, again, we're trying to be a little bit more stringent, a little bit more diligent in our guidelines. So usually, unless you're self-employed, you don't need your tax returns when you're qualifying for a traditional conventional mortgage or a government mortgage. We usually don't need that stuff unless you have rental property or things like that. But for jumbo loans, we're always going to require your tax returns to take a look at those. And then we may need to order a second appraisal. Depending on what the loan amount is, we're going to get a second opinion of value, and we're going to use the lower of the two appraisals. So if the two appraisers go out there and they come up with two different values, then we're going to use the lower of those two appraisals. And hopefully it comes back at the purchase price. We don't want to mess that up, but I've seen circumstances where the second appraisal comes in $100,000 below the purchase price, which really throws things off, obviously. So you have to have enough cash to make up the difference in those types of scenarios. And hopefully you're chatting with your mortgage advisor or your real estate agent going into the transaction so you can at least mitigate that if that's a possibility. But definitely going to need a second appraisal in a lot of instances. So usually loans over $2 million are going to need a second appraisal for sure. And then some investors require a second appraisal with loans over $1 million. So keep an eye on that as an extra cost for you when you're trying to get a mortgage when you're doing a jumbo loan. And then ARM products, I would say, are more common on the jumbo products, but it's not always the best option for you. There's definitely a 30-year fix available. The feeling is that ARM mortgages are always going to have lower rates. It's not always the case. So it depends on what that investor wants. If that investor wants just like solid 30-year fixed mortgages, they're going to price the 30-year fixed mortgage better than the ARM products. If they want more ARM products, they want more shorter term loans, then they're going to price the ARM products better. And it just depends on the investor on how they price that for what they're looking for. But ARM loans are much more common in the jumbo space than they are in any other type of lending that's out there. Okay. And then lastly, they also have this feature that you could do interest only on. So if you are, borrowing $5 million, let's say, and you don't want to pay, you don't think you're going to ever pay any of that off, other than selling the property in a few years, hopefully if the value goes up in the property and you sell it, then an interest-only option might be something that you want to look at because you're only going to be paying interest on the loan, not any principal. And so that's going to minimize your monthly payment. Depending on your financial circumstances, that could be a good option for you. I'm not saying that that's the best option, but interest-only options are available on just about all jumbo loans, okay, all the way, down to the conforming loan limits that we've talked about earlier. So lots of interesting things about jumbo loans. Again, I think I consider myself a pretty good expert with these products. I work with a lot of financial advisors. I work with a lot of high-end realtors, especially here in the Silicon Valley, that we do a lot of these different types of loans. And there's something that's a little bit different about doing them. They're definitely a little bit harder to do, but it's still rewarding to see people get their first homes, even if they're having to borrow $1 million to buy their first property. Okay. If you guys have any questions at all about jumbo loans, hey, I'm your guy. Please reach out to me. I'll put my calendar down below in the description, and I'll put it in the comments as well, so that you guys, if you need to talk to me about getting a jumbo loan anywhere in the United States, I'm happy to help out, and we'll go from there. Talk to you soon. Have a good day, guys. Look forward to seeing you on the next show. Have a good one.